Mike, what are some other things, whether you're a real estate professional or not, but other things people should be thinking about, or maybe they're already doing, but not capitalizing on? So this could be, you know, if you are self-employed, a self-employed RA, if you're saving for a 529B, like what are some of the things that people might be doing and not realizing or not maximizing them on their tax returns? What are some that you commonly see with your clients?
Well, I would say, sole proprietors are a big one. People who file a Schedule C, like carpenters or plumbers who work for themselves, kind of just go and do it. So a Schedule C is the reporting of income or loss on your tax return, and is for the business of a sole proprietor. And what a business is that activity, its main purpose is to generate income or profit from. So when you make profit on a Schedule C, you got to pay federal tax, you got to pay state tax, and you got to pay self-employment tax, which is your Social Security and Medicare, and you're paying both the employee and the employer portion, which equals 15.3%. So some common missed things that people always forget to put on are health insurance. If you're paying your health insurance yourself, you can deduct your health insurance, your vision insurance, your dental insurance right on the Schedule C. And also, people also miss the office and home. And there's two methods to do the office and home. The first one is a percent method. So you take, say, 30% of your house is your office. So 30% of all your expenses in that house are going to be associated to your office. So you got 30% of your utilities, your internet, your mortgage, all that stuff. The problem with that is you have to recapture that upon the sale of your house. And you have to keep all the records. You got to keep more documentation. It's just much more complicated to do. What a majority of our clients do is what's called the simplified method. And that gives you an expense of up to $1,500. There's no documentation needed. There's no recapture when you sell your house, and it's much easier to do. It's basically just a checkbox you put in. I have 300 square foot office in my house, and it gives you the $1,500 expense. And that's definitely the better way to do it. And then here's some things not to do on a Schedule C that we've definitely seen done. So if you make income, say you make $60,000, don't make one expense for $60,000. Definitely don't do that. That's going to be a big red flag. Also, don't make a dummy Schedule C. So if you have earned income and stuff, don't just make a Schedule C with no income and a bunch of expenses just so you can reduce your taxable income. Don't do that. And on the flip side of that, if you didn't make income, you most likely probably had expenses associated with making that income. So take those expenses, document them, but be sure you're taking those expenses, because we see a lot of people who, have done it themselves or had someone do their tax return, who, like their uncle or something, and they don't put any expenses on their Schedule C. So you're just throwing money down the drain. So those are some things that we see.